What is up, everyone? Good morning. Again, it's your host, Carlos Ponce, here with Advancio Talks. And we are live today. For those of you who have, we're live today with Trevor Legwinski. I'm going to let him introduce himself in a minute. Thank you, Trevor, for being so kind to be with us in the show. And I'm going to let him introduce himself, like I said, in a minute, and his company. But for those of you who are watching for the first time, stay with us until the end because we're going to have some announcements. And for those of you who have been with us since the beginning, since 2022, you know what we are about. We're going to be having conversations with those who are actually building the future of business and tech. So that being said, without further ado, I'm going to introduce Trevor. Trevor, good morning, and thanks for being here with us today. Welcome to the show.
Yeah, thanks, Carlos. Really appreciate it. I'm glad we're able to finally get on the phone, and very nice to be here. Would you like me to get a little bit about my background?
Yes,
Kind of
please.
kick off the call?
Yeah,
Okay, awesome.
that's what we're here. Please tell us a little bit about you, a little background, your journey, anything you want to share
Sure.
about you with the audience.
Yeah, no, would love to. Hi, everyone, virtually. My name is Trevor Legwinski, and I'm excited for the show today, really to talk about kind of how do you turn underperforming companies into category leaders. And my background, I've been in and around the tech space for about 20 years. So started in early 2000s in and around machine learning, and have been through multiple tech waves, really in both SaaS-based businesses, services businesses, and then e-commerce businesses. And I think the through line really has been my background is in both product and go-to-market. So I've been able to have the pleasure of working both with venture capitalists, private equity funds, and businesses anywhere from I was employee number 10 at a seed stage startup in machine learning, all the way through my last job where I currently am, where we're helping the model providers in the Mag 7 with all their data needs. And that's a 500 give or so kind of $500 million company. So I've been able to see businesses at different sizes and different scales, and also really I would say develop a methodology for turning underperforming, whether that's a department inside of a company or actually a company in itself, into category leaders. And now Machoo Brands really was kind of a side project that is a hold company and operating company in which I'm working with both boards and investors and looking at SaaS-based businesses and service-based businesses where we're looking at how can we take these companies that either have stalled in revenue growth and or are maybe fourth or fifth in the category and apply AI to them to scale them to a new version of itself or roll it up into a larger scale business. So really excited to talk to you about that today.
Absolutely. Yeah, we look forward to that as well. But before we jump into the topic, I'm curious. Tell us a little bit about the company itself. What was the genesis, the aha moment, as they call it? How did it come about? If you don't mind sharing a little bit about that with us.
Sure. Yeah, I think that the name is an endearing name. Machoo is kind of a fun name that my wife and I actually use. It's kind of an endearing name. The focus of it really is around, working with companies that I have throughout the last 10 years. I've been in probably 12 different companies. And I think the through line really is people, process, technology, and capital are the four kind of pillars for how you build and scale a business. And Machoo is kind of an overarching theme for how can we kind of go in, assess businesses, and help them breathe a new light, whether that's in the same category and or a new category. And it's really bringing those four, call them pillars, people, process, technology, and capital, into that business to help it really grow into a new formation.
Great. Thanks for elaborating a little bit about that. And I'm sure there's going to be a bunch of questions. I already have my own. But
Sure.
before we go there and we'll go into the questions, let's start with today's topic. And this is I was looking forward to this because I mean, honestly, it is intriguing. I'm keen to ask you what you mean by an underperformer. So you say transforming underperformers into winners,
Mhm.
turning complexity into clarity. So let's start there. Why do you think this is a good topic? Well, why do you feel this makes sense in this day and age?
Sure. I think there's a lot of converging trends today. If you're on X or LinkedIn, everyone's talking about AI and how AI is really transforming industries and businesses. When I think of, underperformers, there's a couple lenses we can look at that through. I think one is really company growth rate. So a lot of companies are now really assessing with so much competition, so much venture capital. I think it's over, $1 trillion in the last, let's say, 3 to 5 years has gone into optimizing horizontal and vertical technology stacks around AI, where there's just a lot more competition. There's higher go-to-market costs. A lot of these companies are competing for the same customer bases, where
Mm-hmm.
it's becoming difficult to grow profitably in some
Mm-hmm.
categories. You do have the winners, OpenAI and these larger companies who have raised so much funding that they're kind of in winner take all economies. So when I
Mm-hmm.
think of underperforming, there's one part where those are companies in which their growth rates are severely slowing, or the metrics inside of a business, when you look at, your return on capital or customer acquisition cost, those are just slowing down. And
Mm-hmm.
that's one part that I would say is when we think of underperformers. The other, candidly, that I'm in a couple conversation with boards are around is companies that have been around for, let's say, 10 years, and they've raised some VC capital. They're teetering on profitability, and some companies would call them, zombie companies,
Mm-hmm.
where they really haven't gone and, developed their full potential, but they're profitable and the investors really aren't sure what to do with that business. That's another example of an, let's say, an underperformer.
Okay.
um, does that help kind of give context to those two categories?
Yeah, of course. It does. It does shed a lot of light into the
Mhm.
matter, especially, like I said, especially for someone who needs to know more about the topic, such as myself. Now, I have questions that just starting to pop into my head because
Sure.
I was looking to listening to not only what you do at Machoo Brands and then your journey, and I understand that you also do. You evaluate acquisitions, right? Is that what you do as well?
Mhm. Yeah, I think, part of when we look at companies' growth, and this is somewhat of a new even for myself over the last 5 years, is there's traditional growth when you're looking at organic growth through a business. You can pay for growth through, marketing channels. You can build, let's say, a direct sales team. You can build alliances where you partner with other companies, which I think is becoming even more important now
Hmm.
as, we're getting into this AI age of having partnerships.
Hmm.
And I'd say, the sixth or seventh part of growth really is acquisitions. So
Hmm.
when you're looking at, do we spend more money on marketing? Do we build and spend more money on R&D or CapEx expenses? Given the amount of investment that's gone in both to venture capital, but also the number of companies out there, M&A and acquisition is actually an area of growth that, if done right, I think there's a lot of caveats here. And you
Hmm.
need to decide, are you buying a company for, let's say, their technology, right?
Right. Right.
Using those four kind of pillars. Isn't an acquisition where us as a company maybe are a sales organization and we're really good at sales, but we need to bolster and bring on technology. You can build yourself,
Hmm.
you can partner with other organizations and build channel relationships, or you could potentially buy. And I think part of that has to do with looking at the time horizon ahead. Does it make sense for us to acquire this business? Does our culture match? So, culture fit is a big aspect of this. I think second, that return on capital, is it better for us to spend acquiring a business versus spending on, let's say, paid marketing or direct sales?
Mm-hmm.
And then also, how is this going to really come together as a strategic moat for us moving forward? So
Mm-hmm.
yes, acquisition is an area that I've been looking into a lot more and
Mm-hmm.
really helping organizations assess on that four-part framework for acquisitions as a growth, let's call it growth vehicle.
Mm-hmm. Okay. Okay. And of course, we're always talking about technology these
Mhm.
days. So we're talking about AI. There's a bunch of things going on out there in the tech world, but I always say that it's also important to talk about the human element of the equation. For example, let's say
Mhm.
that when you are evaluating, let's say acquisitions in that, let's say in the 25 to 250 million range, how often does the quality and availability of technical talent factor in your assessment of a company's readiness for transformation?
That's an amazing question. So I think there's a couple angles we can explore here. I think a lot of influencers, a lot of people out there are talking about AI, and they're saying that you need to put AI into your business. It's going to revolutionize everything. I think the important part is to take a step back and realize that if you boil businesses down, you have a product or a service or a solution that you're selling, and you have a lot of business processes that are either front office or back office processes. And when
Mm-hmm.
I say that, that's financial planning and accounting, that's legal, that's really anything that's running in your organization today involves people, typically tools and technology, and there's a process that your team is operating within in a rhythm. Almost, I would think of it like rowing.
Mm-hmm.
And when you look at bringing technology in or automating your business with I think the importance is realizing and documenting those processes and then deciding which do you automate and what's the potential ROI? Is this going to, let's say, add leverage to your team where instead of for one task, it may take 10 people and you can reduce that to five? That's an
Mm-hmm.
efficiency gain that's quantifiable. Or is this something that's going to go bottom of line, let's say that's going to improve your EBITDA, right? Is it a
Mm-hmm.
process that's going to improve efficiency in your business or material purchasing or something that's going to come and flow through to your bottom line? Or the third is, can you use AI, let's say, to build a net new product or service that you're operating on a much higher margin? So that's how I think about it. And then depending on the complexity of the workflow, what you need to think about is, can this completely be automated by AI? Or I think most processes today, even though the media may want you to think this, are really AI is doing some degree of automation, but you still need a human in the loop, either at
Mm-hmm.
the beginning or the end, to verify the quality of that process. So that's how I think through this. And then getting to your point about technical talent, I think the requirement of technical talent really depends upon those workflows.
Right.
So, and the degree and depth of the domain expertise required to automate that, if that makes sense.
Yeah, it certainly does. And if I recall correctly, in our initial discussions
Huh?
a while ago, you mentioned leadership upgrades as part of your advisory work. So, what are the most common gaps you see in tech leadership at growth stage companies?
I think there's a couple, and you can look at this across the organization. I will caveat where this is going to be dependent upon, let's say, the industry and also where a company is in its growth trajectory. Are they product market fit? Are they Series A, Series B, Series C? But I think a lot of the gaps in which I see are, in some cases, in earlier stage companies. Typically, certain leaders cap out at their ability either to grow into the next phase of growth, meaning that depending on your growth rate, they may not be able to scale into that responsibility, meaning that they haven't just seen enough repetitions of this before where you may need to bring in an advisor. And I think of a couple ways.
Hmm.
Assessing the leadership team comes down to, I'll give you a couple of examples. Some early CEOs may have grown a company to, let's say, 5 million or 10 million in ARR, but where they're struggling is they're not making decisions fast enough. They don't know strategically how to plan, but the biggest part is accountability with the team and
Mm-hmm.
making and delegating that responsibility. So I see a lot of times where growth rates are slowing down
Mm-hmm.
has to do with either management not making decisions fast enough, giving team accountability, which means that they're delegating, but also giving shared KPIs around a common strategy where the team can move forward,
Mm-hmm.
or they're micromanaging the employees because they haven't had the experience of building trust and responsibility within that organization. So a lot of the, let's call them upgrades, are either bringing in an advisor to help coach, whether
Mm-hmm.
it's a CEO. You can go to the COO. So from an operating perspective, typically I've seen COOs and CFOs are not empowered enough to make decisions, where the CEO may be taking on too much responsibility, where a lot of the knowledge in the company is actually with that operating partner, where if they're better empowered, the business will actually free up and move. And then you get into, depending on the type of business, you're looking at growth, which typically ties into the sales leader or a marketing leader. And when we think through friction, it may be that they don't have the experience, or it's some type of, I like to put the head of product and head of sales in a room and
Mm-hmm.
figure out, where is it, right? Is it really, do we have a demand problem,
Mm-hmm.
or is it a product issue? Meaning, where is the friction happening? Are customers not using the product, or are we targeting the wrong segment? So I don't know if that helps, but there's the CEO leadership, there's the operating, so your financial, your legal, your accounting, and just general decision making on cash flow.
Mm-hmm.
Then you parse out product. So if you're selling a product or a service, who are the leaders that are responsible for those, and assessing where are the gaps there. And then lastly, you get into your go-to-market side, and depending on what you're selling, that could either be your sales leader, your channel leader, or your marketing leader. And that's how I like to go into a business and assess those kind of four areas to see where are the highest friction points.
Mm-hmm. Okay. And you are advising on AI initiatives as well, right?
I like to think through, I'm not an AI expert, so I don't want to coin myself as a technical AI expert. I think what I'd like to say is I view AI as a tool to optimize businesses.
Mm-hmm.
So I think some people come in and they've been in AI, they're technically experts, and they're looking just at AI as, let's call it, kind of a lever that's going to fix everything. I would characterize myself more as an operator who understands that AI is an effective tool if
Mm-hmm.
done effectively and methodically from a financial standpoint that can either drive efficiency top line or bottom line, if that makes sense.
Yes, absolutely. And uh, so what I'm hearing is that uh, when you're advising on companies on AI initiatives, for example, and not as an AI expert per se, but as a consultant who can speak the language, so to speak. So in this process, what are the? I'm curious. What are the bottlenecks, the talent bottlenecks, or the technical bottlenecks, or any kind of bottlenecks that you encounter most frequently?
Sure. A great question. I think a lot of the bottlenecks honestly come, there's two ways that AI diffuses in an organization. Typically, it either diffuses bottom up, meaning that the frontline teams and the engineering teams are seeing problems and trying to push those initiatives up to the director, the VP, the C levels to institute change. That's one way it can happen. That happens much more slowly. And typically, if you don't have an executive stakeholder at the C level, like let's say a CIO or CTO that's spearheading it, it will slow down because there's just not overall buy-in. I think
Hmm.
the second and most best that I've seen is having both a top down and bottom up, meaning the CEO typically, if this needs to be done well, has to be a board level, C level mandate where they are themselves working with these AI tools. They're with the team, they're understanding and instituting this change. I'd like to call it kind of AI enablement, both top and bottom down,
Mm-hmm.
because there you're getting the CEO in the room, which is showing the organization that this is a top level mandate. Also, you're getting financial backing that instead of this being a, let's say, departmental or managerial change, the business is really willing to make that effort because I
Mm-hmm.
think top down is one. So C-level integration. Second is not chasing shiny objects, meaning when you're looking at these projects, that's why I took a step back. This
Mm-hmm.
needs to be very methodical for what are you trying to do? Are you trying to make your team more efficient or are you trying to improve EBITDA and revenue? That thought process needs to go in at the beginning.
Mm-hmm.
And then from there, it becomes a business process, a workflow, and a technology question.
Mm-hmm.
Where I see companies candidly waste a lot of money is they're just chasing without that form structure and they're wasting a lot of money. If you're a Google or a larger organization, you may have the free cash flow to do that. But if you're talking about mid-market and SMB type companies, you don't. So to
Mm-hmm.
summarize, it's executive leadership buy-in, budget and shift for change, iterative thinking, meaning this isn't something that you're going to set and forget like previous technology changes. It's something that you're iteratively going to work on, see
Mm-hmm.
results, and further invest into. And then I think you need the rest of the organization all on board to make this change happen to be truly successful.
Mm-hmm. Great. Thank you for elaborating on
Mhm.
that. And I really, I mean, I hate to do this, but we need to. I know you have some time constraints, and I
Sure.
have like a tons of questions, but I would like to ask you one in the
Of course.
specific, and then we're gonna do a little wrap up here.
Okay.
Uh, so I'm curious to ask you what your experience has been, or have you had any kind of experience with companies that have tried to scale too quickly,
Mhm.
without the right infrastructure in place? It could be talent infrastructure, technical infrastructure, or whatever. So, have you had any kind of experience with these companies?
Yeah, I mean, I think I've seen all of them actually. So in some cases, you have organizations that scale sales. This goes back to they're very good at selling, but the technology infrastructure isn't there to scale beyond that.
Hmm.
Meaning, let's say an organization went from, I don't know, 20 million in revenue to 100 million in revenue very quickly over 2 years, but the technology, the underlying e-commerce platform, the technology layer, they've been using people to fulfill that versus technology. What
Hmm.
you typically find is they hit a stalling point in growth. That's where this goes into growth, where they need to take a step back often for 6 months to build that technology muscle back to get leverage to scale to 200, 300 million.
Hmm.
So that's one side. I'd say in some cases, depending on the industry, that's a little easier than companies who have over invested in technology. And then I've seen 4 or 5 cases of this in startups where you've over invested in your technology, but you don't have a market yet. So it's
Hmm.
harder because you have so much R&D expense. If you don't have the financial runway, you start to get in dangerous situations where you have to raise debt or you need to let people go. So I would candidly rather be in the situation of I have too much demand, but my technology needs to keep up
Hmm.
versus I have an amazing technology, but no one knows about it. So
Right.
those are the two, I'd say, typical sizes I've seen
Hmm.
where candidly it's a little bit easier to engineer yourself out of a demand problem than to engineer demand out of a engineering problem or
Of course.
product problem, if that makes sense.
Totally get it. Yes, and unfortunately, we're running out of time, so Trevor. So, and we're talking about transforming underperformers into winners. Where can people reach out to you if they want to learn more about the topic or
Sure.
about anything we talk about today? Do you have a? And I understand you're on LinkedIn, right?
Yeah, I'm on LinkedIn. I think you have it below LinkedIn. I'm also on X, and then my email is here as well if you'd like to reach out to me.
Yes, absolutely, folks. So there you have it. If you have questions for Trevor, or you simply want to reach out, connect, or whatever, that's his LinkedIn right there. And also, we have your email address,
Mhm.
trevor@machoobrands.com, right? And
Yes.
that's where you can email Trevor. And of course, he is also on X, and it's right there, Legwinski.
Yep, you got it.
So that's where people can generally get a hold of you or reach out to you, right?
Yes.
Great, awesome. So Trevor, it's been a great pleasure to have you on the show today. I'm sure there's going to be a ton more questions. Please reach out, folks, if you're watching either live or in the next few weeks in the recorded version. Reach out to Trevor. Again, it's right there on LinkedIn, and then on the website. I'm sorry, the email,
Yeah.
also on X. So, Trevor, it's been a great pleasure to have you on the show. Thank you for taking the time. And without that's the only thing left for me to say is thank you for agreeing to finally make this
Of
happen.
course.
All right.
Thank you very much. Really appreciate it. I'm sure we could have gone on for hours. So thank
Of
you for
course,
taking this time.
absolutely. Yes, but thank you. And please, Trevor, stay with me as we go off the air, and the rest of you.
I will.
Until see you next time.
Thank you.